Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. It's time for another report on the market. In this video, we'll talk about the recent drop in the market and possible reasons for it, as well as Bitcoin's dominance and the flashing of the recession sign. So stay tuned. The latest market crash a couple of weeks ago was probably easy to see if you were following the charts. Around the middle of July, Bitcoin was leading a market rise that went all the way up to 70,000 and then back down to as low as 49,000. At the time of shooting, prices had gone back up to around 60,000. In the meantime, Bitcoin hits yet another important milestone. During the most recent dump, Bitcoin's control rose and finally broke through the 55% level it had been holding for 15 weeks. At the same time, its price went up and down between 50,000 and 70,000. Don't forget that the Bitcoin dominance measure is not affected by the price of Bitcoin, but rather on how much it's worth compared to other cryptocurrencies. When we talk about price action, Bitcoin just made its first death cross of 2024. This is a technical sign that shows short to medium-term downward progress. When Bitcoin's 50-day MA falls below its 200-day MA, this happens. This didn't happen to Bitcoin since September of last year. Even so, the negative trend didn't last long because excitement about ETFs helped Bitcoin reach new all-time highs. Still, at the time of the shooting, Bitcoin's power was still growing. This means that the overall altcoin market is still losing more value to Bitcoin, even though it is worth more in USD. This report should be looked at least once every 2 weeks. Because when Bitcoin finally loses its hold on the market, it could be the start of the real alt run that most traders and altcoin lovers have been waiting for. Go back to the north, get a latte, and stop trying to change the world. Also, this thing in November redacted is the hackathon, and they're trying to get people to work in offices. Everything is going as planned for our special event Redacted, where we'll be talking about AI, Web3 chain abstraction, decentralization, and user-only AI. I'll see you there. The market slowdown, which happened around the world, has been blamed on a lot of different things. The most important one is that the Bank of Japan raised interest rates by 25 basis points, which was the first time in 17 years that rates had been raised. This was done because wages and prices were going up in Japan. To give you some background, the short-term loan rate was only 0 to 0.1% before the rate hike. This price increase means the end of the famous Japanese yen carry trade, according to analysts. Some experts think that last week's chaos might not be the end of the yen carry trade, so it's important to understand it. Let's make it easy to understand. In the yen carry trade, people borrow yen for little or no cost, and then use it to buy things outside of Japan that earn more than nothing. They then make a profit. These investments could be stocks, crypto, foreign currencies with better rates, or anything else. As the value of the yen went down, it became cheaper to pay back loans, which made the carry trade more profitable. So, when interest rates on loans went up, a lot of traders started to get out of their positions, either to keep the money they had made or to avoid losing it. Traders had to buy yen to return their loans, which made the value of the yen go up against other currencies like the US dollar. It will cost more to return loans, which makes other traders more likely to sell their assets to pay back loans. The setting off of the recession indicator is another reason given for the market crash. This indicator has historically been correct. If buyers think a recession is coming, this could have scared them off. It's important to note, though, that even Claudia Sum, the person who made the indicator, admits that it might not work for the present market. But will things be different this time? Tensions are also rising in the Middle East, which makes buyers and traders feel less confident and more negative. Others, though, say that even though the market as a whole went down, the SP is still up about 10% so far this year, which is better than usual. Bitcoin, on the other hand, is up about 40% from the beginning of the year. Gecko, it looks like that's all the time we have for today. What do you think about the markets? Did you buy the dip, or do you think a slump is coming? Share your thoughts below.